What's going on, guys? My name is Tyler and welcome back to the channel for another very important AMC update video. And in this video, we're going over everything you guys need to know as far as the data is concerned. But keep in mind, these are only my opinions. What I am about to say next might rub some of you guys the wrong way, but I do think AMC is headed for a rally, whether in the near-term future or within the next month or two. And we're going to be going over my reasonings for those. These are factual based. So my opinions are my opinions, but there is some factual information that you guys do need to know about. But that is what we're going to cover in this video, so make sure to stay through so you get the whole scoop of what is going on. Drop that like on the video if you want to see AMC stock go to the moon, as well as comment down below. Let me know what you think about my opinions. Also consider subscribing to the channel and turning on that notification bell. Now let's acknowledge the move for today, up 1.21% in normal trading, down 0.30% in after hours trading. This was a pretty good move for the day. Obviously, we're not seeing that huge volume going into the stock. We were only at 57 million for volume, which is pretty typical. About 13 million less than we did see yesterday, but like I said, pretty typical. And we have really been watching this $33 level. It has been a resistance level for quite a long period of time, really just going over 33, coming back under. So we won't know for sure if we will actually break out to the upside much more than $33 before we do come back down. So that's going to be first and foremost the biggest thing that I am watching for. If we can break out to, let's say, over $37, get close to $40, start flirting with that as a resistance level, that would look a lot better. But as we do currently sit, we are literally trading sideways, going from a low of $30 and really a resistance, like I said, at about $33, going up to about $35 and then coming back down under $33. So definitely watch for that. Watch for the volume to go back into the stock. So it is pretty neutral as far as the charts are concerned. You could see though, if we do break out past this level, really at about $37, we could be due for that breakout over 40. But once we get into more of the actual facts of what is going on behind the scenes with the hedge funds and institutions, their collateral crisis that is going on, as well as what is going on with the banks starting in the next month or two, you guys will have a clear picture on why I think a rally is coming for AMC. But let's get into the Ortex data, guys. Let's update this right now for you. 19.01% short interest. We have never been in a more bullish situation for a short squeeze since we did see this gamma squeeze last time around, obviously June 1st through June 3rd. So right now we're looking more bullish than we ever have been, guys. Like I said, 19.01% short interest. Current shares that are estimated that are sold short, 97.24 million. That is a huge amount. That is about 2 days worth of our current volume going in as just shorts covering. Literally all buys going into the stock. Not even to mention the group of FOMO buyers that are just going to buy the stock because it's going up. The group of day traders and even hedge funds and institutions that are waiting for the short squeeze to start to jump into this and make a trade. So definitely looking very, very good right now. If you consider the naked short positions as well as the synthetic short positions, you're looking at, like I say all the time, in between about 40 to even 80% short interest, in my opinion, if the number of shares outstanding is really 513 million shares, which do on our calculations, you're looking at about 10% extra shares that are outstanding just based off of factual math. The apes that own shares about 80%, the institutional investors that own about 29% of the shares that are outstanding, and the insiders in the company that own about 10 million shares. Like I said, you definitely have more shares outstanding than 513 million shares in my overall opinion. But the share utilization is at 92.56%, so staying relatively flat. 7 days ago at 92.39%. This did actually come down about 2%, but that is to be expected, I guess. Once the share price is continuing to go down, you're seeing more brokers that are actually willing to lend their shares out, or even hedge funds and institutions that are willing to lend their shares out. So ultimately that is bullish for us. That gives us more room for the short interest to climb, because if nobody wants to lend out shares, the short interest would stay pretty stagnant unless they did start covering. So definitely bullish right there. You want to see the share utilization coming down as the short interest goes up. I know it's been a while since I said that, but that is actually what you want to see. Now, once you get to about 95 to 100% share utilization, obviously you have a chance for forced recalls, as we are seeing as the cost to borrow is going up. 7 days ago at 1.35%. Now the average cost to borrow is at 1.47%. So the theory with that is if some of these hedge funds and institutions or brokers, whoever lent out these shares to other hedge funds, institutions, if they wanted to get a higher interest rate, they could call these shares back at any time for any reason. They have to give it no explanation and then relend these shares out for a higher margin or a higher percentage interest rate. But we're simply not there yet. It's not worth it for them to do that. But something else I want to keep in mind is the free flow on loan is continuing to go up, now at 21.83%. So this is really a relative gauge to where the short interest could go, at least in the near term, because the free flow on loan are shares that are actually out on loan, but that have not been sold short yet. So if we have a 19.01% short interest, you're looking at the availability of about 2.83% additional short interest to go into the stock in the next coming week or two. Now, if we see the free flow on loan continue to go up, that means the short interest could ultimately continue to go up as well. So everything here looks more bullish than we have ever seen, guys. That is something I want to make very clear. We are more bullish than we have ever seen. So as far as the stock tracker data, that is the next thing I want to get into. We're still looking pretty neutral, but we're obviously seeing more calls that are starting to run into the money as a percentage of puts that are running out of the money. But still, we have less calls that are in the money relative to puts, only 43,643. For obviously next week's expiration day. In the money puts at 54,469. Odds are you've seen quite a bit of hedging for these options that are in the money. I think the biggest thing is going to be options that run obviously from out the money to into the money. That's where you get the biggest chance for actual hedging. As far as a gamma squeeze, buying going into the open market to hedge these options. For puts, it is shorting going into the market to hedge these puts. But you are looking at more calls now that are out of the money for this next upcoming expiration. 291,001 calls that are out the money. For puts, you're seeing 223,603. But keep in mind, the puts is still really high, over 200,000, calls approaching 300,000. So by this time, by actual midweek next week, you could be looking at well into 300,000 puts and calls that are out of the money. So you can have a potential here to see a lot of gamma activity to the upside or a lot of shorting activity to the downside. So I think it's going to be very important to pay attention to the volume, where money is going. You always want to watch the big money, the overall grand scope of what is going on, and really watch that $30 support level as well as $33. If we can break out above that, get over 40, you're going to see some level of gamma squeeze activity going on. Obviously, not to the level that we did see June 1st through June 3rd, but nevertheless, buying power is a great thing, no matter where it comes from. If it comes from hedge funds, institutions, FOMO buyers, day traders, or apes like us, or market makers hedging these calls, I will take buying power wherever you can get it. We don't discriminate on buying power. So that is the stock tracker data. Pretty neutral, but definitely starting to lean towards the calls, as traders did buy more calls today than they did buy puts. Now, something else I do want to bring to your guys' attention is the overnight reverse repurchase agreements. The reverse repo market, guys, is at about $1.05 trillion for today. This is a very large amount, and we actually did see the first day at about $1 trillion. This was August 10th, so that was on Monday. Guys, we are looking extremely bullish here. These hedge funds and institutions, they need somewhere to put their money to stay in these short positions. But the biggest thing I want to point out here is ultimately the Fed will stop doing this at some point into the near term future. I don't see them continuing to let this situation get even more out of hand. They're going to start winding down and only accepting a portion of these, or maybe a majority of these. But if they start to decline, let's say 100 billion at a time, that will definitely have an impact as to what to do with this money. The banks aren't going to hold on to it. So ultimately, the hedge funds, institutions would have to start covering on their short positions, or just buying stocks overall. But it makes more sense to just cover on your short positions with this extra money. So definitely, guys, keep this on your radar, over $1 trillion. Watch to see if we do continue to climb over 1 trillion. I would say about 1.5 trillion would be that tipping point where the Fed is not going to put up with that for too much longer. That would be about triple our all-time highs we have ever seen in the reverse repurchase agreement market. So you're looking at a big can of worms here that will have to be solved in the near-term future, and that will definitely be a decent catalyst for AMC. Now, I am pulling up the Fintel data, guys, to take a look at the long positions in AMC, and we did get a lot of filings for today, August 13th. Geez, we got a lot of filings released today, from here all the way up. So let's see. This is the first time I'm looking at this as well, and let's take a look at this. I did screw that up just a little bit, but if we do take a look, guys, you are seeing some sells, but you're seeing still more buys than sells. You're seeing more holds really than anything, and new positions, but you are seeing 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 firms that have sold out, but you're seeing much more than that have actually bought new positions. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Yeah, so you're looking at almost 30 firms that have bought new positions. So over double the amount of firms that have sold out, but you're also seeing a lot of firms that have just held on to their exact same positions. Keep in mind, a lot of these positions are at about $33 per share. That might be why we're seeing a lot of activity around $33. We're getting rejected at 33 or just over 33, and we're not really going too far under that. We're only going down to about $30 per share. So there is an obvious interest to keep the share price in between about $30 and $33. You're going to see a lot of contracts that are going to expire worthless. That may be part of it, because as we do know, the market makers, they are behind the options contracts that we are buying. So if you are losing on your contracts, the market makers are winning on their contracts. So definitely something to keep in mind. Short positions in AMC, that is what we just went to. Obviously, the green are new positions. The white and gray are the same positions, meaning they haven't done anything. The red are firms that have sold out. You see one firm that has sold out reflected as of today, August 13th. You are seeing even more, way more firms that are loading up on new positions, and some that have kept their same positions. These are all puts, guys. Keep in mind, there is a lot of exposure when it comes to puts. Really 100-to-1 leverage. So if you're losing on these puts or making money on these puts, you have a big swing in percentages in gains or losses that you are making on your positions. But overall, hedge funds, institutions, they're not selling out. You see Citadel, that's the position I really want to see if Citadel has sold out, but they have not filed their 13F filing yet. So we'll have to wait and see on that. We'll be bringing a whole video on that. But overall, guys, you're seeing more hedge funds and institutions buying into AMC or holding onto their positions, which is ultimately bullish as well. And you are seeing a lot more shorts taking on short positions that are actually being reflected that they are covering. So if you mix all of this together, I think the situation is very bullish. Now let's get into this rally situation that is going to be happening in the next month or two, in my opinion. And obviously, I'm not even going to pull it up. I'm just going to explain it to you guys. So obviously, the DTCC, we just went over this in the previous video, the last video we just did. So definitely check that out, guys. But essentially, the DTCC are going to start doing margin calls for hedge funds and institutions coming September 1st. Try to do automatic margin calls. If the ratios fall under a certain level, they're going to be automatically margin called. And as we do know, there's a rush to collateral. As we do know, the Fed is eventually not going to accept all of this money as collateral for Treasury bonds. So that is a situation in and of itself coming September 1st. But the biggest thing, guys, coming October 1st is the banks have to start holding on to more money. So the hedge funds and institutions will have to deposit more money into the banks. They will have less money to play around in the markets. Keep in mind, interest rates are very low, so they want to play around in the markets. So once that does happen, you're going to see this liquidity start to dry up, and essentially to put this money in the banks, they're going to have to do something with these short positions, especially if AMC is on the up and up and starting to rally. So those are two very important dates to keep in mind, literally 1 month away from each other and about 2 months from now. So I think there's going to be a rally within the next 2 months. Who knows? Could be wrong. Might be the mother of all short squeezes. Might not be. I'm not trying to predict that by any means necessary. Don't get me wrong. I'm holding on to my entire position until the short squeeze actually does happen, and this is confirmed to happen via the Ortex data and all the other platforms that we follow to see the short interest actually go down significantly. So that is all for this video. Drop the like on the video, comment down below, as well as consider subscribing to the channel and turning on that notification bell. Also, check out the 2 links down below in the description. We are not promoting Webull. Now, you guys can check it out. There is a link for that, but we are promoting Public. They do not use payment for order flow whatsoever. Get up to $70 in your choice free stock in about 3 minutes time with no need to link a bank account or deposit a single dollar. It is by definition free money. If you did this right now, you'd have your free stock in 3 minutes time. So definitely check that out. Also, there's a link for the buy and sell alerts that pays for itself. You join a private community of about 40 members strong. So definitely check those 2 links out. But that is all for this video. I will see you guys in the next one.